We have discussed and learned various trading concepts, starting from trend lines, support and resistances, then chart and bar patterns, and then set of indicators, and thereafter we discussed proper usage of Fibonacci, divergence trading, and relative strength comparative. We will now learn some specific trading setups, but let's first define a setup. So a setup is a particular configuration of bars or candles, usually with one or two or even more confirming conditions, say an indicator that delivers an expected outcome. Now a setup identifies the conditions that precede and accompany a price move. Now one of the benefits of setup trading is that you can be out of the market until you spot a setup situation. You take no risk when you are out of the market. And risk management is the key feature and critical to success. All successful traders use stops, and if you have a problem obeying your stops, then setup trading might be for you. And remember that a setup that you like may not appear every day or even weeks. With a small universe of a market segment, say Forex, you would have to memorize a dozen setups if you want to be in the market most or all of the time. If you like only one or two setups, you have to monitor a large universe like that of securities. But that doesn't really mean that you must have plenty of setups for trading Forex. See, the game is really about patience and discipline. You must have the patience to wait for your desired setup to come, even if it takes days or weeks. If you have conviction over your setup, everything else will fall in place. But you must never lose patience at any cost. So let's start our discussion on setups with daylight. Now this narrowing of a price range is followed by expansion. When price range narrows, it has got no choice than to expand. Volatility is likely to be witnessed, and that creates opportunity. Now this setup warns of an exploding move occurrence, quite often with precision. And the primary tool used for assessing such an indication is moving averages. And you must make sure that the setup candle must have the largest body compared to preceding 5 to 6 candles. And for higher probability setups, you must stay with the trend. Let us now gain more knowledge on the tools, and then how do we determine a potential setup, where to enter, place stops, and determine potential targets on the chart itself. Okay, so let's understand this setup daylight on Euro USD. In order to trade this setup, we require 3 exponential moving averages with settings 21, 34, 55 to be plotted on the chart. So this one is 21 exponential moving average, this one is 34 periods exponential moving average, and this one is 55 periods exponential moving average. That's it. Now this setup occurs when all the exponential moving averages converge and single price candle trades through all the averages and closes beyond. The exponential moving averages must go dead. So this is now our setup candle, and we will be trading in the direction of sentiment as portrayed by this setup candle. If the candle is white, then the sentiment is bullish, and if it's black, then certainly it's indicating a bearish tone. So in this case, we have a white candle closing, and accordingly we will look to buy this pair. Now where do we enter, place stops, and set targets? We will deal with that a bit later on, but at this juncture it's crucial to understand thoroughly how a setup should look like. So let's examine few more charts. We have 21, 34, 55 periods exponential moving average on this chart. The setup occurs when we have converging exponential moving averages over here. See how the averages are overlapping and almost going dead towards the end. What I mean by dead is that there literally should be no gaps between all the three exponential moving averages. All the exponential moving averages should eventually look like a single line. So do not forget, they must go dead. Now look at the price. See how the range has got narrowed. And this section specifically, it's a warning that there might be an explosion in movement. We can see there are lots of candles trading through the moving averages, but appearance of long candle is the tip off. And we have that moment over here. See how this candle is having a large body compared to its preceding 5 to 6 candles. So this certainly is our setup candle. But remember, trading against the trend is dangerous, and we are yet to filter faulty signals. So don't worry on that ground. Okay, we have another stock here, and let's continue to gain knowledge on this setup. This chart obviously does have 21, 34, 55 exponential moving averages. And look here, see how the averages are beginning to coincide, and here they are going dead. It does look a single line. Here also there are several single candles that are trading through all the moving averages, like here, here, this one here, and here. But none are of use as parameters are not getting fulfilled. So we need to be very careful in our assessment. Here we do not have exponential moving averages going dead. This candle doesn't have any real body. Now this candle does have a real body, but a small one, and not the largest. And this candle over here does have a real body, but a small one, and not the largest when compared to preceding 5-6 candles. But this candle here has certainly got everything. EMAs are going dead here. The candle is the largest compared to preceding candles. No doubt this candle sticks out and is indeed a promising setup. Let's have a look at another chart and then step ahead. Here again we have Euro USD. So here the EMAs are converging. This single candle trades through all the averages. Now certainly there are several such candles here that are trading through all the averages, but now you already know the reason why not to consider. And it's because none of the candles have large body. And this candle in particular does have a large body compared to preceding candles. And finally, the EMAs must go dead. So we now know how a setup candle should be. We will now learn a technique to filter out bad signals and simultaneously learn where to enter, place stops and set targets. So we have a USD JPY chart here. Okay, so here we can see all the three moving averages to converge and going dead. This is a long candle piercing through all the averages, and this candle is the largest compared to previous 5 or 6 candles. So this is a potential setup candle. But how do we confirm now? Now in order to confirm, we must make use of stochastic indicator with 14 periods setting. We have to check for two things here. Number one, just prior to setup candle, stochastic must be in overbought or oversold levels. If we are looking to sell, the stochastic must be in overbought condition. So we do have an overbought condition here. The barometer is getting fulfilled. Number two, as we are looking to sell, therefore trend should be down. And we cannot determine the trend to be up or down using classical method, that is price making higher highs and higher lows for an uptrend or vice versa. Now determination with traditional method gets difficult as market at times go terribly range bound. So we will use stochastic again to determine the trend. Now how are we going to do that? First, we will mark immediate overbought oversold condition prior to setup, and that instance is over here. Since it's an overbought scenario here, so we will mark immediately preceding overbought condition, but between these two overbought conditions there must be an instance of oversold condition. So this is a preceding overbought condition here, and between these two overbought areas we have this oversold area in between. Next we will mark corresponding overbought point on price and around swing high. So it's going to be this area. So now we have this swing high over here and this point here. This high is lower than this high and is therefore bearish. And also we have a setup candle that's bearish. So we have a confirmation to go short. We will place sell order below low of the setup candle. Now this candle over here takes the low out of the setup candle and sell order gets activated. Stop is going to be placed at high of the setup candle, and target is going to be based on Fibonacci levels. Price most of the times strikes either 161.8 or 261.8 levels. Now adopting a conservative approach, you should book profits at 161.8%, and which is here. We have a different pair now. Let's understand the setup again. So we have three moving averages, exponential, converging and going dead over here. This long candle is piercing through all the averages. It's a black candle suggesting going short, and we will now confirm the same. We have stochastic indicator below with 14 period setting and have to check for two things. Number one, prior to this setup candle, stochastic must be in overbought, and it is. Number two, as we are looking to sell, therefore trend should be down. So first we mark an immediate overbought condition around the time of this setup. Since it's an overbought scenario here, so we will mark immediately preceding overbought condition. But between these two overbought conditions, there must be an instance of oversold condition. So this is a preceding overbought condition here, and between these two overbought conditions, we have this oversold area in between. Next we will mark corresponding overbought point on price and around swing high. So we have a swing high here and this one over here. Now this high is lower than the preceding high. If the line is downward sloping, then the trend is down. If it's sloping upwards, then we should not take this trade. So we have a confirmation now to go short. Place sell order below low of the setup candle. Stop is going to be placed at high of the setup candle, and target is based on Fibonacci levels, and price hits the same. Okay, let's do it again one more time. This is GBP USD. So we have three moving averages, converging and going dead over here. This long candle over here is piercing through all the averages. It's a white candle suggesting going long, and we will now confirm the same. We have a stochastic indicator below with 14 period settings and have to check for two things. Number one, prior to this setup candle, stochastic must be oversold, and it is. Number two, as we are looking to buy, therefore trend should be up. So first we mark immediate oversold condition around the time of this setup. Since it's an oversold scenario here, so we will mark immediately preceding oversold condition. But between these two oversold conditions, there must be an instance of overbought condition. So this is a preceding oversold condition here, and between these two oversold conditions we have this overbought area in between. Next we will mark corresponding oversold point on price and around swing low. So we have a swing low here and this one here. This low is higher than the preceding swing low and is therefore bullish. So we have a confirmation now to go long. Place a buy order above high of this setup candle. Stop is going to be placed at low of this setup candle. And target is based on Fibonacci levels. And price hits the same.